Hey class, week 5, module 5. This week we're going to be talking about macroeconomic analysis and perspective analysis. Last week we covered industry analysis, which is more micro. But this week we're going to be looking at the bigger picture. So with that, let me share my screen. All right, so here's the announcement, and what this is showing here is the total demand for goods and services. Now, the reason why this is important is because it helps you understand the financial statements, and it also allows you to do a better job in projecting or forecasting future cash flows, future financial statements for your evaluation. So, a lot of things come into play when it comes to the demand for goods and services. The government consumes goods and services. They make purchases. Households make purchases. Corporations, institutions make purchases. Financial markets, they extend credit and give loans to help make expansion possible. The government also creates fiscal policy. There is demand from abroad, so you'll have imports and exports, and the net of those will be your net imports or net exports. So there's just a whole lot of factors that will affect the demand for goods and services. Now, that will help you perform a prospective analysis. And a prospective analysis is simply a forecast of revenues, expenses, and any other line item in between those. Now, I have a link here, and the link takes you to an article by posted by the Harvard Business Review, but as you'll notice, it's a really old article, but it's still very, very relevant and it's very informative. So I recommend just taking a look at this. If you don't want to use this, that's okay. Whenever you're doing your model, your Excel model for the project, that's okay. I have built in some formulas that you can just use. And what you essentially do in that case is for revenue, for example, you would look at the past 5 years growth in revenue or change. And if it's, let's say, 5%, then you plug in 5% and then you let the model do the rest of the work. But if you're interested in doing a little bit more work or a deeper dive into the subject, take a look at this article. It has some really good tables at the bottom of it, if I can get there. And so it talks about the 3 types of perspective analysis: qualitative, using qualitative techniques, time series analysis and projection, and then causal models. So basic forecasting is covered in this first table. It covers the qualitative method, the Delphi method, market research, and then just getting panel consensus to come up with it. Like in an organization, panel consensus would be just talking with various department heads to help project the expenses related to those business units or revenue. Here's some more qualitative methods. Now, time series analysis and projection covers moving average and exponential smoothing. And more down here, Box-Jenkins, X11, trend projections. Causal covers regression analysis, which is a statistical type of method, and then it also covers econometrics and various others. But anyway, that's a really good article if you're interested and want to know more about that subject. All right, now let's take a look at the module overview real quickly. All right, so all companies bear some type of risk: systematic risk or non-systematic risk. Systematic risk is risk that you cannot diversify or cannot eliminate, basically. If you have a portfolio, you can have different types of stocks within that portfolio. You can diversify away non-systematic risk, but you cannot diversify away systematic risk. It's in the system, as I say here. Some examples of those are going to be like your short-term liquidity, and ways to assess short-term liquidity are looking at a company's operating cycle, its current ratio, which is just its current assets divided by current liabilities, quick ratio, asset receivables turnover, accounts payable turnover ratio, and to analyze long-term solvency, which is whether or not a company will be in operation over the long haul based on their revenues and the debt that they have to service and pay off over time. And that can be analyzed by looking at a company's debt ratios, interest coverage ratios, which interest is like the interest you pay on debt, and then operating cash flow to total liabilities ratio. Now, another systematic risk is credit risk. And this is talking about a company's ability or inability to repay debt whenever it's due. And in order to assess credit risk, companies or banks look at credit history, they look at cash flows, contingent liabilities, covenants like loan covenants, and then just the overall character of management. Lastly is bankruptcy risk. Now, this is clearly the likelihood that a company would go bankrupt. Ways to predict that, and yeah, so here I talk about an interesting article here that was published in the 1960s or 70s. There's a metric that this group of researchers actually came up with to predict the likelihood of bankruptcy. I'll have to post something on that and let you see a link to that. Some basic ways to look or assess bankruptcy risk is just net income divided by total assets, net working capital divided by total assets, and then current assets divided by current liabilities. So, all right, so that's an overview of the material for the week. Now, make sure that you check, oh wait, there's one more thing I want to cover, and that is linking the topics for the week to the text, because I know that's been an issue in the past for some people, is having a direct link, or people have had difficulty in tying what's being covered in the text to what is being covered here in Brightspace, and various other topics we've talked about, like such as the module overview. And so here I'm doing that. For example, we've got macroeconomic analysis, company-specific risk, and perspective analysis. These are the places within the text that these topics will be covered. And again, they tie back to this. So this week, make sure you read those chapters 5 and 10 in the text, and then go ahead and complete your milestone for the week and any other work that you haven't turned in. And let me know if it's a late assignment. Let me know about it. Otherwise, let me know if you have any questions.